the end of America. That is the phrase they use. They tell you the dollar is dying. They tell you the government is bankrupt. They tell you that by 2026, the paper money in your pocket will be worthless. And there's only one lifeboat left: silver. You've seen the headlines. Robert Kiyosaki is calling for $200 silver. Analysts are screaming about a short squeeze that will bankrupt the bullion banks. The narrative is seductive. It's terrifying. And if you listen to the gurus, it's inevitable. They say it's simple math. The government prints trillions, the dollar collapses, and silver, the poor man's gold, finally has its day of reckoning, shooting up 600% to hit $200 an ounce. But what if I told you that this prediction isn't about silver? What if I told you that the $200 target has less to do with geology or economics and everything to do with neurology? In this video, we aren't just looking at charts. We are going to deconstruct the script of doom. We're going to look at the psychological weapons used to sell you this narrative. We'll expose why $200 silver is a mathematically dangerous bet that could wipe out your portfolio, not save it. We're digging into the secret history of the 1980 and 2011 crashes, events where the rules were changed overnight to crush regular investors. And we'll look at the real reason silver is rising, the solar revolution, and why that very success might actually put a ceiling on the price. If you are thinking about going all in for 2026, you need to watch this first. This is the analysis the gold bug gurus don't want you to see. Let's get into it. To understand why people are calling for $200 silver, you have to understand the business of financial doom. The $200 prediction is rarely presented as a dry investment thesis. It is almost always packaged in a very specific type of marketing story known in the industry as the end of America script. It works by hijacking your amygdala, the part of your brain that processes fear and survival. The script always follows the same 3 steps. Step 1, the secret threat. The narrator, usually a credible authority figure, tells you that the mainstream media is lying to you. They say the stock market highs are a mirage and that a rot is eating the foundation of the country. This triggers cognitive dissonance. You feel uneasy because their scary story conflicts with the calm reality you see on TV. To resolve that anxiety, you have to keep watching. Step 2, the mechanism of doom. They use complex economic truths to sell a lie. They talk about the $35 trillion debt. They talk about the death of the petrodollar. These are real issues, but they extrapolate them to an extreme conclusion: hyperinflation. They convince you that the only logical outcome is for the dollar to go to zero, and this is where the trap snaps shut. Step 3, the magic bullet. Once they have terrified you with the prospect of losing everything, your savings, your pension, your home, they offer you the one solution: silver. In this narrative, silver isn't an investment. It's survival capital. They frame it as a binary choice. Either you buy silver and get rich, or you hold dollars and become destitute. Robert Kiyosaki is the master of this. He frames the $200 price not as a target, but as a consequence of the biggest crash in history. The danger here is that it bypasses your rational brain. You stop asking, is silver a good value at $35, and start thinking, I need to buy at any price to survive. That is how bubbles are formed, and that is how investors get slaughtered. Now, I want to be clear. I'm not bearish on silver. In fact, the fundamental case for silver is stronger right now than it has been in decades. But it has nothing to do with the collapse of the dollar. It has to do with physics. For the last 5 years, the world has used more silver than it has mined. We are in a structural deficit. In 2025, that deficit is estimated to be between 160 and 200 million ounces. That is nearly 20% of the entire global market. Why? Because of the photovoltaic singularity. The solar industry is changing tech. They are moving from older PERC cells to new TOPCon and HJT cells. These new cells are more efficient, but they are thirsty for silver. A TOPCon cell uses 50% more silver than the old tech. An HJT cell uses nearly double. Solar demand alone is consuming over 200 million ounces a year. And here is the kicker. It is price inelastic. If you are a solar manufacturer, you need silver to make the panel work. If silver goes from $30 to $50, you pay it. You don't have a choice. This voracious demand is draining the vaults. Inventories in London and New York have plummeted. In China, the Shanghai Gold Exchange inventories have hit decade lows. The metal is moving east, and the vaults are running on fumes. So we have rising demand, falling supply, and empty vaults. Doesn't that prove the $200 case? Doesn't that mean the price has to go vertical? No. And this is where the danger comes in. Because when you bet on a straight line to $200, you are forgetting the two forces that have crushed silver rallies for 50 years, the referee and the engineer. Let's talk about the referee. History teaches us that whenever silver threatens the financial system, the rules get changed. Look at 1980. The Hunt brothers cornered the market. Silver hit $50, it looked unstoppable. But then the COMEX exchange intervened. They introduced Silver Rule 7. This rule forbade anyone from buying new silver positions. You could only sell. Overnight, the buying pressure evaporated. The price collapsed from $50 to $10 in weeks. The game was rigged to stop the squeeze. It happened again in 2011. Silver touched $49. The narrative was identical to today. The dollar is dying, QE is destroying us. Everyone was long. Then, in late April and early May 2011, the CME group raised margin requirements. The cash you need to hold a trade, 5 times in 2 weeks. They raised the cost of trading by 84%. Small speculators couldn't afford to hold their positions. They were forced to sell. The price crashed 30% in days. The lesson: if silver goes parabolic toward $200 in 2026, the exchanges will raise margins. They will change the rules to protect the bullion banks. Investing with a target of $200 ignores this regulatory ceiling. Now, let's talk about the engineer. The second danger is substitution. Remember how I said solar manufacturers have to buy silver? That is true at $30. It is true at $50. But at $100 or $200. At $200, silver becomes too expensive for industrial use. The solar industry is already researching copper-based alternatives. If the price stays too high for too long, the industry will innovate silver out of the panel entirely. If silver hits $200, it kills its own demand. The solar boom that is driving the price today would vanish, replaced by copper. So, where does this leave us for 2026? The $200 target is a dangerous siren song. It relies on a total collapse of the US government or a fantasy world where regulators don't intervene. Betting your life savings on that outcome is not investing. It's gambling on the apocalypse. However, the rational case for silver is still incredibly bullish. JP Morgan sees silver averaging $56 in 2026. Bank of America sees it hitting $65. Other analysts see a breakout to $100 based on the solar deficits. If silver goes to $60, that is a 100% gain from $30 levels. That is a fantastic return. You don't need the end of America to make money in silver. You just need the green energy transition. Here's my verdict. Don't buy the doom script. Buy silver because solar panels need it, not because you think Mad Max is coming. Watch the margins. If you see the CME hiking margins, get out. The crash is coming. Take profits. If we hit $70 or $80, don't hold out for $200. History shows that parabolic moves always correct. Silver is a strategic asset, not a lottery ticket. Treat it with respect, and it will serve you well. Treat it like a cult, and you might end up like the guys who bought the top in 1980, still waiting to break even 45 years later. What do you think? Is $200 realistic, or is it just marketing hype? Let me know in the comments below. And if you want to see the real data on the solar supply crunch, check out this video right here.